Selamat sejahtera. My name is Dr. Hanim Kamaruddin. I am a lecturer from Faculty of Law, University Kebangsaan Malaysia, and I will deliver a chapter on legal issues and entrepreneurship. The outline for this chapter will cover 4 objectives, where firstly you'll be able to understand the 3 forms of business, namely sole proprietorship, partnership, and company. Secondly, we will be able to discuss the advantages and disadvantages of each forms of businesses. Thirdly, you'll be able to understand the process of business registration. And finally, you'll be able to describe and identify 6 types of intellectual property. The basic questions that you need to ask yourself would be, firstly, again, what are the business entities that you can choose to form? And there are 3. Like I mentioned earlier, the first one is sole proprietorship, second one is partnership, and the third one is a company. As an entrepreneur, there are 3 concerns that you must look into or take into consideration. The first one is how to register business in Malaysia. Secondly, what are the requirements to form a business in Malaysia? And finally, what are the documents needed to register as a business? In this part of the lecture, you'll understand the first two forms of types of businesses, where the first one will cover sole proprietorship, whereby you will learn the characteristics and formation of sole proprietorship. Secondly, you will learn the formation and characteristics of a partnership formed in Malaysia. And finally, which is another type of partnership, which is known as limited liability partnerships, where you will again understand the characteristics of limited liability partnership and formation thereof. In regards to sole proprietorship, it is understood that it is the simplest form of business which is normally owned and operated by a single individual. You will be able to identify this by looking at, for example, home-based businesses such as landscapers, housekeeping services, tutoring, buying or selling merchandise online, or food catering online. Now, you'll be able again to identify this type of business when you see a business that uses personal name according to the identification card or a trade name. The characteristics of sole proprietorship normally has unlimited liability, which really means that the business owner would have to shoulder any financial responsibilities that is put onto him. Now, as I said, sole proprietorship is a single ownership, but at times the owner would employ workers to run the business. In order to run a sole proprietorship, the business must first be registered under the law, and therefore, for the purposes of registration, renewal, and termination, the owner must take into account the laws governed under Registration of Business Act 1956. In this slide, you will be able to see the advantages and disadvantages of a sole proprietorship business. It is one of the easiest and least expensive form of ownership to organize. The sole proprietors would have complete control, and they can make decisions as they see fit. They will also have the right to receive all income generated by the business, either to keep or reinvesting in the business itself. Profits received from the business will flow directly to the owner's personal tax return. And finally, the business is easy to dissolve or sell if the owner desires. When it comes to the disadvantages of sole proprietorship, again, one must remember that the owner has unlimited liability, meaning Since sole proprietors are legally responsible for all debts against the business, their business and personal assets are also at risk. Now, raising funds in this type of business may be more difficult compared to other forms of businesses. Sole proprietors are often limited to using funds from their personal savings or consumer loans. This type of business may also have difficulty in attracting high caliber employees or those who are motivated by the opportunity to own a part of the business. The next form of business entity is partnership. It is normally operated by at least two, but more often more than two persons. There must be a common intent between or among the partners to operate the relevant business with the objective of making profits. Let's look at the characteristics of partnership. The business of a partnership is usually carried on as a firm, and as it lacks legal personality, the partners will be held accountable in their individual capacity for the actions and liabilities of the firm. And normally a partnership cannot comprise more than 20 persons. During the formation of partnership, the partners are required to seek consent or approval for the proposed name of their firm and to make an application for the registration of the firm in accordance with Registration of Business Act 1956. The partnership can begin or can carry out its business after the Registrar of Business has issued a certificate of registration, and this certificate must be displayed at every address where the partnership carries on its business. Here again you will find the advantages and disadvantages of forming a partnership. As you will see, a partnership is relatively easy to form and the startup cost is rather low. It allows several people to combine resources and expertise, and also to gather a wider pool of knowledge, skills, and contracts as compared to a sole proprietorship. The regulation governing partnership is rather limited, and partnership shares a similar feature to sole proprietorship, whereby each partner is taxed individually, which means that each partner includes business income on his personal income tax return. The advantages of a partnership is where the partners may find difficult to find suitable partners to carry out the business. Again, it shares the same issue when it comes to liability, where again unlimited liability is imposed on each partner. Therefore, the partners are personally and jointly responsible for all the debts of the firm. The authority in partnership is divided, but it may not be clear. In partnership, partners can legally bind each other without prior approval. Unfortunately, in partnership, it lacks succession plan, which means the duration of the partnership is uncertain, and if where any partner dies or is injured or withdraws his stake in the partnership, sells his interests, or a new partner is admitted into the business, the partnership will come to an end. There is another form of partnership which is known as a limited liability partnership, where it is a corporate body and has a legal personality which is separate from its partners that make up the partnership. It means any changes in partners shall not in any way affect the existence of the partnership or its rights and liabilities attached to that firm. Now, let me just tell you a little bit about the characteristics of limited liability partnership. Normally, as I mentioned before, a limited liability partnership is a body corporate and shall have legal personality separate from that of its partners. In this form of partnership, it shall have a perpetual succession. It will be solely liable for any obligations, whether arising in contract, tort, or otherwise. Now, any changes in the partners of a limited liability partnership shall not affect the existence, rights, or liabilities of the limited liability partnership. Thus, in a limited liability partnership of this kind, it shall have unlimited capacity and shall be capable of, first, suing and being sued; secondly, acquiring, owning, holding, and developing or disposing of property; and finally, carrying out other acts where bodies corporate may lawfully suffer the consequences thereof. Now, the formation of limited liability partnerships can consist of any two or more persons, either as individuals or a body corporate, where they can form a limited liability partnership for profit as agreed in the partnership agreement. The professional governing bodies are specified under the first schedule of the Limited Liability Partnership Act, and therefore the governing bodies will consult the Registrar of Limited Liability Partnership in order to ensure that there would be formation of limited liability partnerships in that sense. On this slide, you'll be able to find the advantages and disadvantages of limited liability partnership. Now, the advantages can extend from its flexibility to being a separate legal entity and the advantages in taxation purposes, whereas the disadvantages would be that the individual partners need not consult with each other over business arrangements. The partnership can automatically be dissolved upon the death of a partner, and therefore there is the lack of easiness when it comes to ownership transfer and investment that such a firm provides. More importantly, when it comes to tax exemptions, no corporate tax benefits are available to limited liability partnerships as opposed to private limited companies.